Welcome and hello and welcome, guys. Welcome and hello to another exciting edition of Un Poco Mas. It's a two for Friday, guys. We did a totally crappy show just hours ago, and then we're going to follow it up with an equally awful sequel. It's going to be just Un Poco Mas on top of Un Poco Mas. It's still Un Poco, but it's a little more Poco. So it's Friday, guys. It was it was sort of an odd scheduling deal. Prairie Operating Group or Prop announced their quarterly results today after hours, and then they're going to do the actual earnings call Monday pre-market. It's not a normal arrangement, but you know, whatever. It doesn't really matter. The results are the results. So I just want to do a really brief kind of look at this because my feeling is a lot of people just do not understand how to look at numbers and how to actually analyze the progress and valuation of small energy producers or midstream companies. A lot of people are taking a look at this and they're saying, well, the GAAP number is not there. They're not earning money on a GAAP basis. They lost 22 cents a share. And that number is almost completely irrelevant because, and I'll go through why. I kind of understood this at like a rudimentary level, but I went through with like some articles and chat GTP and Copilot, all that. So I could just understand it a little more better. Um, the thing to really, if you keep your eye on the prize, they're affirmed their production guidance for the full year. This is not a scam type of company or some type of financing scam. They're a real energy producer, and at least to my untrained eye, they are actually optimizing the efficiency of their assets, and they're drilling efficiently, and they're spending money wisely. And I think in not too long, you're going to see a huge, amount of free cash flow from this company because when you look at GAAP accounting, there's huge amounts of depreciation, and then hedging activities with mark to market can dramatically skew GAAP accounting because you have to mark down the hedge before you ever even sell the product you're hedging. So it just doesn't make any sense. So this company has plenty of cash flow coming in. I mean, I would have liked to see, a little bit. I would have liked to see 10% 5 or 10% higher EBITDA, sure, but the bottom line is they're getting the job done. And I think, like I said, in a year's time, this company is going to be making a lot of cash flow and returning cash to shareholders. And to me, it looks like they're going to be able to buy out, some of the problematic preferred shares and avoid this sort of catastrophic levels of dilution that a lot of people were speculating. But anyway, today's trading is sort of, not that relevant, but just interestingly enough, it was algo held between 174 and 173 like all day. So that's odd. With 1.7 million shares traded, you could see it's a penny stock, so less than $2. You're talking about, $300 million worth, or I'm sorry, $3 million worth of total churn. So the market cap 87 million. You're looking at quarterly revenues approaching that level, and I know there's dilution coming. It's just a question of how much. It's the tsunamis coming. Is it catastrophic, or is it just a tidal wave photo op? So I think this management actually has their head on their shoulders, and they're doing a pretty good job. Now, if you know more about this industry than me, you might disagree with my the veracity of my conclusions. But anyway, so total revenue 78 mil. Net income wasn't 1.3. Net income was a loss. I don't know why they put that in there somewhere, but record adjusted EBITDA 56 million. A lot of analysts, at least I had been hearing through the grapevine, were looking for at least 60 million, so a little bit under. But I actually thought give 45% quarter over quarter. I thought was actually surprisingly good. 10% increase in quarterly production, 23,000 barrels a day, and critically current run rate of 27,000 barrels per day. So we already saw this record production, current production rate, expanded hedging program, securing favorable commodity pricing through 2028. This is really critical what they're doing. A lot of people think it limits their upside. I say exactly the opposite, because the major risk to this company is basically a crash in these commodity prices, and they're hedging against that, I think is beyond prudent. I think it's, absolutely necessary and fundamental to the, survival of the business, given the, rapid, crazy things that are happening in the world economy, for a variety of reasons. But completed transition services period act following acquisition of assets from Bayswater, closed two complementary bolt-on acquisitions, which added approximately 11 net drilling locations, 3,400 net acres. This is what it's all about, is like, what resources can you buy at what price? So you want to get undervalued production that you can bring out of the ground, relatively easily. And that's what they focused on, is buying assets for less than they're worth. At least that's what management's telling us. The third quarter represented another major step forward for Prairie as we continue to execute across all areas of our business, said Eddie Kovalik. I think that was the guy from Born on the 4th of July, Chairman and Chief Executive Officer. With Bayswater transition now complete, Prairie has assumed full operational control and is focused on expanding operations in the Denver-Julesburg Basin footprint. Looking ahead, our strategy remains clear and disciplined. We're focused on building long-term shareholder value through a combination of high-return organic development, continued operational optimization, and selective accretive, I never know how to say that, acquisitions. I want to personally thank the entire Prairie team for their dedication, hard work, and professionalism. The progress we've made this year has set the stage for continued momentum into 2026 and beyond. So revenue, 78, again, approximately equal to the current market cap, driven by realized prices excluding hedges, 58 per day. This is you guys can read this for yourself, but net loss was 22.5 million, EBITDA 56 million, which was an increase of 45% quarter over quarter, capex 70, net cash provided by operating activities was 58 million. Again, if you're looking at these companies, don't take my word for it, look it up. They trade on EBITDA. They trade on cash flow, because that's the lifeblood of this economy. It's all about servicing the debt, paying the royalties, paying the leases, and these non-cash items is huge, like depreciation, because you depreciate assets very, very quickly in the energy business, but they can produce much longer than that. It's kind of like the rental property business. You build an apartment building and you depreciate it over, I think it's accelerated like 20 years or 20, but you might be renting the apartment building for the next 50 or 100 years. So it doesn't necessarily, the depreciation life is just an accounting thing. It's not the actual. So this is the same thing. It's like GAAP net income just does not accurately reflect this type of business at this stage, at this scale. Is just almost a useless number, but it might, really hurt the stock on Monday, which I think, again, would be a big opportunity. I hope we see insiders buying. So this is what gets critical. Operations update. The third quarter marked another significant step for Prairie. Current production, we already said that. 27,000. On the development front, flowback operations are now completed on 7 new wells from Noble Pad. You have to look this up. I've kind of done this to an extent, kind of go over all their assets and property. Finalized 6 newly drilled wells in the Simpson Pad. All of these wells, these are just going to produce. You put in the capex, you spend a lot of money up front, they depreciate fast, and then it's a cash trickle for years and years to come, just depending on what's under there. It could be 3 years, 4 years, 5 years. Some of these wells can even go longer than that. Just some of them have already been in use. Some of them are obviously brand new. They're drilling. So it's a mix of assets and production you have to go through and analyze. I'm not able to do that. So I just lift this stuff off other people or Chat GTP or whatever. The Nobel pad is now fully online, with Simpson pad executed to be fully online in the fourth quarter. At the Roche pad, drilling completions, Gillette operations for 11 wells have been finalized and turned into sales. These wells target multiple horizons across Niobrara, and I don't know what any of this stuff is, to be honest, with the Codell formation, and expected meaningfully contribute to production growth through the remainder of 2025. So it's basically, that's the whole name of the game. Bring new production online efficiently. That's the whole thing, In addition, Prairie successfully completed and turned to sales 9 wells on the Opal Coalbank pad that were acquired as drilled and uncompleted locations in the Bayswater transaction. Initial results have exceeded expectations, with an average IP30 of approximately 525 barrels of oil per day per well, 2-stream gross. Beyond new drilling, Prairie remains focused on optimizing its existing asset base. The company has launched a robust workover program. And this is, I think, again, critical, targeting 32 wells across the third and fourth quarters, with 31 workovers completed to date, including 18 during the third quarter. Additionally, Prairie has installed plungers across 183 wells, resulting in an average oil production increase of 12.6% per well. These optimization initiatives, along with ongoing improvements to gas lift systems and pad efficiencies, underscore Prairie's commitment to maximizing per well productivity and overall capital efficiency. So there you have it, folks. Again, this is not anything that's going to light the world on fire. This company is not something, where it's going to be Palantir and it's going to get you rich overnight. But what this is prudent management, buying assets for less than their value, and then it all comes down to execution. Can you drill efficiently? Can you manage? Can you pull the resource out of the ground and get it to market? And then beyond execution, you have your financial people. Can you do appropriate hedging so that you guarantee yourself a good price, which now they've gone out through 2028 at 60 $61 a barrel. And a lot of people think energy, the world economy could slow down. Energy, of course, it could speed up too. They haven't hedged 100% of their production, but I think it's like 80 to 85% or something. So they're not subject to the whims of the market in terms of, the energy prices fall apart in 2027 and basically the company is going to be bankrupt. Because these small companies, if the price goes down that significantly, you're just not going to be able to, make a go of it over at Grover Cleveland. Let's see. Sorry, I don't have my glasses. I can't really see what the hell's going on. Let's see who's here, guys. User first. The great Nautilurker is here. Thank you for joining us once again, the great J Money. I didn't really expect you to join us for this one since it's such a turd. But the question is, will it prop up the stock price? Very punny, Carl C. Mark. The mattress, more than the mattress king, you're the comedy king as well, sir. A double threat. And he's a dancer, a triple threat, excuse me. A ballroom dancer, a competition ballroom dancer. One of the guys that whips around the woman in the little tiny dress. And, the guy's got a bunch of sequins on, like he's a figure skater. I don't know. People are very athletic, very tight, hair pulled back, stern looking, look like East German women. A stern Czechoslovakian nanny. Anyway, will it cause I don't think it's going to cause the stock price I think it's going to go down and then it's going to go up, because I think people that understand what they're looking at understand that this company is really on the right track. It started a little bit slower. The transition was a little bit slower. I think they gave numbers that were just completely pie in the sky, but I kind of knew that going in. I'm like, what really matters, like I said, cash flow from operations, EBITDA, that's how you value these things. It's not, it's not super complicated. But they returned a lot of shares today, which I thought was pretty interesting, because I think market makers who follow this stuff pretty closely knew what was coming, because they gave an update on things. And with the hedge stuff, there's not a huge, question mark as far as price. So even people on like StockTwits and stuff, they were calling this out pretty accurately. People who understand this. 25% shares on loan. This stock has a pretty high probability of actually short squeeze. Oh, thank you, Nautilurker. I forgot to get water. Give me 10 seconds. I'm not going to go to the bathroom. I'm not trying to trick you. I'll be back in 5 seconds. Hello. Closest thing I could grab was, in fact, a mini water. Oh, life's bitter ironies. Makes me look even fatter. Anyway, so Bristol sold out. Bayswater sold out. We know that, but institutional ownership remains near all-time highs. It's kind of, neither here nor there, because this was pre-Bayswater, after Bayswater. It's 18%. What I would note here, what is of note to me, more importantly, this filing just from a couple days ago, Blackwater, they only decreased their position 0.42%, basically nothing. And then Vanguard increased their position 0.55%, basically nothing. And their average costs were about like 6 and 7. So they don't have huge positions here by any stretch of the imagination. It's a couple of $1 million. But the fact that they're seeing this thing walk down and they're seeing production, and then last quarter they didn't sell their stake, that tells me they know that this is going to swing back up and market makers are going to take this back up. And this is just a typical walk down to basically acquire more shares more cheaply. And then I think the stock price being down wasn't necessarily a bad thing for them to, get out of these preferred shares with their pants on. But what do we have? Marshall Weiss had increased their stake 174%. All the major shareholders seem to be increasing their stake. Susquehanna, who's another big market maker, increased their stake 356%. So they were buying the dip, kind of dollar cost averaging. Goldman Sachs increased their stake 836%, and their average cost is down now under $3. And that's very typical Goldman. They will, if they have conviction, they're going to buy, they're going to buy the dip. Fidelity small cap 330%. You have a few new positions in here. UBS increasing 23%. Raymond James increasing 14%. SquarePoint, Morgan Fudley increasing 89%. Citadel starts a new long position. Only 87,000 shares, but this is just Charles Schwab increased 46%. So there's not a huge institutional presence here, but all the players are here. All the players are here, and they're increasing last quarter, which is very telling to me. And they know a lot more than I do, of course. Insider ownership, 42%. They're calling for, and then just not for nothing, but the short squeeze score is 84, and that's pretty high for a stock like this. Institutions, we don't know what they were doing in the fourth quarter, but in my mind, I didn't see any, or we didn't know what they're doing in the third quarter for the filings in the fourth quarter. I have no idea what I'm talking about. For the next filing, we don't know what's happening yet. For this quarter, I'm sorry, for like October and then into this month. So I would guess if they were buying heavily at 3, they're going to be buying even more heavily at 2, because Goldman and BlackRock, they're able to go to management. I think even the CEO might have worked for BlackRock or Goldman. I can't remember, but I know he was a so and so with one of those big couple of top 5 firms or whatever it is. So it's not he speaks their language. He's a finance guy in Houston. He's not an oil guy in the Julesburg, Denver basin. Know what I mean? So anyway, I just think you have the recipe for this stock that is misunderstood. People want to apply, metrics to it that just don't really fit. And people had unrealistic expectations. And probably I did too with, some of the numbers and how fast the production was going to get going. But I think if you really look at it sober, with the scope of the task management took on with this acquisition, and then they had 2 more bolt-on acquisitions, I think they're executing quite well. I mean, I'm not going to say it's an A+, but B+, A-. And you're buying this stock. I mean, look at, Goldman's average is $6. You can buy it right now for $1.60 something. Same exact shares for, a fourth of the price that Goldman and Vanguard paid. That's very telling. I know I'm not saying they make the right decisions all the time. They could buy a dog turd just like the rest of us. They do it all the time. But they figure out how to salvage most of them. Jam that dog shit down our throat. Know what I mean? So I don't know. Let's talk Monday, guys. See what we thought of the ER. Let's listen to the earnings call. But I see this as just a really big opportunity. I think management owns a lot of it. They're aligned with us. I think the cash flow is such that they're going to be able to sort of buy their way out of some of the dilution that a lot of people think is sort of the major problem of course, owning the stock. I mean, if it was just this market cap and it was going to stay this market cap and you saw production going where it's going, of course, you're just going to, buy the stock hand over fist. And that's just the false, equivalency or whatever people are making a false argument. Oh, the stock should be $12 because that. Well, no, maybe the stock should be $4 because you're going to have triple the share count, or maybe it should be $6. So you're going to have double the share. Whatever, that's really the key to the whole ball game. It's not GAAP net earnings. It just doesn't make any difference. They have plenty of cash right now and under their credit facility to take care of their immediate needs. So there's no problem with the business going forward. And they're going to make more and more cash, like, 78 million this quarter. Let's just, see what they make next quarter, because production is obviously, significantly higher, at least 10-15% higher. So theoretically, maybe they should be making 90 million plus. Sorry, my voice just popped. I'm finally going through puberty. Testicles descended and everything. So anyway, if you go to investor relations or Edgar or whatever, it's available over there. And you can see the filing where Bayswater and then dumped their whole stake. That's Prairie Operating Reports. EPS 44-cent loss versus 68-cent. Again, don't worry too much about that. Revenue, EBITDA, far more important metrics, and then cash flow from operations, 58 million, and then they have 10 million in free cash, 58 million left in credit. So they seem okay. It's not a huge. I'd like to see obviously a little more cash, but I think that was up from 5. So they seem to be paying their bills, and then they have a lot of receivables. It looked like 50 million or so in receivables. So definitely, they're getting product to market, and that's basically their job. And then, of course, financing, hedging, taking care of all the preferred shares, dilution risk. It's a lot to juggle, but if they can juggle it and they can get it done, there's an extreme amount of deep value to unlock here. If they can keep that dilution away and keep raising production, this is just going to become a free cash flow machine, and they're going to pay royalties, dividends, whatever to us. That's my theory anyway. But it's been a bumpy ride. Obviously, you see the walk down here, guys, from 10. This was just in February. We'll drop basically off a cliff to 450, came back to 430 all the way here in July. 360 in August, and then just sort of this walk down from 250, pop back up there. You guys remember this little update, then back down. So they just walked this thing down, kind of banged it off a floor here. Given these results, given that they're bringing in cash, they're increasing production, they're doing things, I think, efficiently, prudently. Management seems to be very logical with how they're approaching them. Whether you think they're doing the right stuff or not, I think you could definitely say they have a decent head on their shoulders about where they're going. It's just they're slightly behind schedule, or schedule, depending which side of the pond you're on. But what I'm hearing from management, the comments, I want to hear the call, but I want to hear obviously their response, because analysts are going to have a lot of questions. There's a lot of confusing, aspects of this stuff. So, and I wouldn't. It's like you can go over this kind of on your own time, but it's basically why cash flow and EBITDA matter more. Cash is king. Capital intensive operations. Energy production is cash hungry. Drilling, maintenance, land leases require constant reinvestment. Operational cash flow shows survival. Free cash flow is even better. EBITDA strips out non-cash and non-core noise. Depreciation. Energy assets depreciate rapidly. This doesn't reflect actual cash outflows. EBITDA isolates core profitability and focus on earnings. Ideal for comparing operations with different capital structures or tax regimes. Lenders and acquirers often use EBITDA multiples, not GAAP net income, to analyze these businesses. And it talks about GAAP metrics can obscure reality, impairment, mark-to-market swings. GAAP requires write-downs and fair value adjustments that can distort net income. Hedging gains and losses, unrealized gains, losses on commodity hedges can whipsaw earnings, even when cash flow is stable. Non-recurring items, small producers often have one-time charges, i.e. exploration write-offs that muddy GAAP results. Cash flow signals operational efficiencies, and then GAAP net income can be negative while cash flow still remains positive. And then you can go into how hedging distorts GAAP metrics. They're hedging so much, it just makes GAAP mark-to-market, non-cash paper losses, paper gains, timing mismatch between hedging, accounting, and physical sales. it's just, trust me, at this stage, that gap number just doesn't mean that much and shouldn't scare you, too much. But again, you have to kind of go over this. This is kind of new to me. I haven't invested in that many of these companies, just probably a handful over the years, maybe half a dozen. So I don't understand them as well as I understand certain other industries like home building and, just certain things that are more in my wheelhouse that I've had a lot more experience with, medical devices and different stuff like that. So I don't know. I don't know this well enough. All I know is the guy who continues to recommend this stock to me, I've had very good luck with on some obscure picks and recommendations. I know his background. He has a background in energy. He's a trader, um, decades and decades at this, and he says this is a hidden gem. He was giving me this back, well, I think when it was like $3, so it's even more, 350. I don't know, but he said this is just, he's buying. I can't say, that it's going to be successful. All I know is I think it's undervalued. um I think the execution is really pretty good, and I think the expectations people had were just completely unrealistic, which is sort of skewing everything to the dour and the downside and the wet blanket and the black cloud and all that sort of thing. So I don't know. Go over the ER. Let's talk about it next week. Let's see what we think. Let's see if the sky falls on us and we just get flat. I just, like I said, where's the price going to go, guys? It can't go lower than zero. I mean, they dropped the stock, what, down to 60 cents a share? You don't think this current management's going to get financing and buy everything up? I mean, I don't know. Doesn't take a genius to see that this is already, I think, very, very low. It's just like I said, everything depends on the depreciation, because how much the stock, or not depreciation, excuse me, dilution. I'm sorry, very tired. But everything depends on how much the dilution is, because that ultimately is going to, say how much your shares are, our shares are worth, the shares that we currently hold. So if the share count only doubles, I think we're sitting pretty, and the stock should be worth 5, $6 at least, rather than $1.75, but $4 anyway. But if the share count, say, triples, then you have to take that into account. Instead of your shares getting cut in half, they're getting cut down to a third. So, you know, you don't have half of the pie anymore. You have a third of the pie. So if you say in your mind, well, the shares are worth $10, but half dilution, mine would be worth five. Well, if you got to go down to a third, and your shares might be worth 333, and then they always overreact to any dilutive event. So any dilutive event, it goes down below that value. So, wait a couple days and then buy that dip. Just keep buying the dip until you're in such a deep hole you can't get out. You know, that's pretty much how these go. Pretty much how these penny stocks go. Just keep digging until you're in such a deep hole you can't see the sky anymore, and then just give up, take your loss, curl up into a fetal position, and call for your mammy. Pretty much what you do. Basically, guys, it's a huge shit sandwich. No, I thought the ER was actually pretty good. Let me know what you guys think. Who's anybody making some comments here? We got $8 after hours. No, it's not. The hell are you talking about, Bobby Joe? You're messing with me. News come out on 10x. Oh, 10x is $8. Oh, awesome. I don't know what happened. Thank you. I was like, this stock is $10. This stock is $8. What the hell happened with 10x? Okay, it went up and back down. Must have put out some data. Uh, Honestly, I don't know what happened. Um, Let me see if Vortex has anything. They're usually pretty good with news if there's any filings. Um, So anyway, guys, let's see for 10x, Healthcare Capital Partners, Venrock, 10x Therapeutics, Lynn Global Fund. Yeah, I think they got a bunch more institutional investment. Mrs. Q3 EPS. Yeah, they just did ER. So yeah, they had a better than expected. I looked at the ER the other day. I actually meant to do a video on this, but I'm going to assume this is some type of new financing or investment. Venrock Healthcare Capital Partners, Delaware, shared voting. So they have 500 and 553,000 shares. 10%. So I don't know. Did they buy from man? I have to go through, guys. I have no idea what happened. My head is spinning. Obviously, something very significant happened with 10x, and I appreciate you, Bobby Joe, for bringing that to my attention. It's just at the current time, I don't have any idea what actually happened. Maybe I can find it. Hold on. Let me go back over here just so I can pull up something, and that something is StockTwits. Just because there's usually a bunch of lunatics on here. Yeah, it's up 15% after hours to $8.18. Let's see. Could be a buyout. Squeeze in after hours. Third buyer tonight. So it's institutions coming in. Institutions are coming in fast. The problem with 10x and everybody saying, it's going to be a $200 stock is there's a lot of warrant overhang between 11 and 12, believe it or not. So I don't know if there's big enough news, big enough institutions coming in, they want to buy the company out. The warrant overhang can be worked out, but in the current form of the company, you could definitely get a 50% pop. It could pop to 10, $11, no problem, but it's not going to run up like SMMT because there's just going to, obviously they're going to start exercising warrants and just dumping shares on the fire like water. Mini water, if you will. Anyway, guys, let me look at 10x. I apologize. I'm going to go through prop more carefully, but I got to run right now. I just got other things to do. But if you're a prop shareholder, I think this was actually really good. I like how they're trying to optimize existing wells to make them produce more, make them more efficient. I like their drilling program where they have one rig and they go, very efficiently, space to space to space, week after week after week, drilling new wells, bringing, pre-drilled inactive wells online. I like what they're doing. I like the fact they're already, currently at 27,000 barrels of production a day. I think management's actually doing a good job. I don't know why people think it's any type of scam, to be honest. I don't see it. I see these guys of course, one of the guys, the older guy, had been with some companies that went, bankrupt or had to do restructuring and stuff. But that's very, very common in this industry. Usually, what happens is, the underlying commodity price drops off a cliff for whatever macro reason, and you're left holding the bag, and you just can't make it on. If oil was 80 and then all of a sudden it's 40 or whatever, you're obviously completely screwed because there's not that type of margins in this business. But anyway, 10x doing a second phase 3. I thought they were doing 3 phase 3s. They keep doing they keep doing more and more trials. They get more money. So no, I don't know. And then it's back down to 0, I guess. So I don't know what the hell's going on, guys. I gotta look. I can't analyze those filings. I gotta get my nerds on it because I don't know accounting. So I gotta get Strongman. Me and Strongman are gonna have a hot chocolate and talk it over. Talk about our fifis. Talk about skin irritations and eczema and different stuff. Just scratching ourselves violently and shooting a camera angle straight up our nostrils while we drive around our block slowly, pretending like we have somewhere to go. Let's go prop. Thanks, Clap My Dog. Thanks, everybody. Thank you, Naughty Lurkers, so much. I really appreciate it. I'll try to give you guys a 10x update tonight if I can get Princess J to give me permission, or she falls asleep. Maybe get her some boxed wine or something and a turkey leg. And if she goes to sleep, I'll try to do a dive into what's going on with 10x and report to you guys ASAP, because you guys are always my top priority. You bastards. Anyway, thanks, J Money. Thank you, Nautilurker. Really appreciate you. Thank you, Princess J, for putting up with me. Thank you, QT. Thank you, to, of course, to me for hosting, our studio audience for bringing mini water for everybody. Don't have enough for everybody. Don't bring any at all. Anyway, guys, I really appreciate you. It's prop, PROP. It's 10x, TNAX. It was a little after hours pump and dump, and then made some kind of freakish pattern. So I have no idea what the hell is going on, but I just don't get your hopes up. Sometimes these things pop and people react oddly, and then this thing could spike to 850 on 100 shares traded. It's a real low flyer. Like a lot of days it'll trade 50,000 shares. So, but it went back up a bit today, 41 cents. It's been doing this all the time, guys. It's been fluctuating between 760 and 640 or whatever. So anyway, guys, thanks so much. I hope you guys have a great weekend. Really appreciate you watching. It's Un Poco Mas, the show where we give you just a little bit more. Peace.